Thursday, December 29th, 2022, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at how Russia, China, and many other countries are continuing to pile on to their gold reserves and move away from the dollar as a major reserve asset. We're going to look at the consequences of that as well, not just for the United States, but the countries that are heavily dependent on the United States and the West. Before I start, though, I'd like to say I posted a photo of the new puppy my wife and I have bought. He's not coming home until February because he's still very young. He was born on the 1st of December. He is a little Shih Tzu like Billy was. And yes, his name is going to be Rudolph or Rudy. So here's a photo of him if you hadn't seen it yesterday when I posted in the community tab. So a lot of you know about this editorial from the FT from 2004, April 16th, 2004, which disparaged gold. It said, going gold. The pointlessness of holding bullion continues to sink in. So that's the FT. I'm not going to go over it, but it's ironic that this morning I've seen this article here in the FT about gold. It says, gold buyers binge on biggest volumes for 55 years. China and Russia have been big accumulators of the precious metal in 2022, analysts say. So I had spoken about this before, that in the third quarter, I think there was about 400 tons of gold bought. And it was the most, this year was the most gold that had been bought since 1967. But it looks like it's getting even more pronounced now. As I said, it looks like Russia and China are continuing to pile on the gold reserves. It says here, last month, the World Gold Council estimated the world's official financial institutions have bought 673 tons. That's a lot because in the third quarter, they had bought almost 400 tons. So now in 1 month, in November, apparently that's going up to 673 tons just for a month. It says here that the third quarter was the largest 3-month binge since quarterly records began in 2000. The fact that World Gold Council is saying that official institutions or central banks have bought 673 tons in 1 month, I think is huge. And that if you look through the article, you see that a lot of these countries are non-Western countries. They're countries that are trying to protect themselves, their dollar reserves. They're getting rid of their dollar reserves and buying gold because of the way the United States has been using the dollar as a weapon, political weapon. The fact that the United States and the West froze $300 billion worth of Russian foreign reserves. And I think the Bank of China, the People's Bank of China, is probably thinking the same thing. And also the meeting between President Xi and the Saudis back in the beginning of December, the announcement of this new petro yuan, because that's what it was. And that's what even Zoltan from Credit Suisse said in his latest piece that was actually published 2 days ago. I have a copy of it. You can see it here that he's saying it's the dawn of the petro yuan. And yes, that's why I think the importance of the dollar as a major reserve asset is going to dwindle. Doesn't mean the dollar is going to disappear. People are going to still hold dollars. What it will mean, though, and I've spoken about this many times, it will mean higher inflation in the West, especially in the US, because there will be less demand for dollars. There will be more demand for the yuan, more demand for gold. gold will be like the neutral reserve asset for these countries. I think these countries have learned a lesson. You can't trust a political reserve asset because it's political. Gold is a neutral. Gold can't freeze your assets. They can't act like the U.S. Treasury can and freeze your reserves of dollars. Of course, unless you leave your gold with another country, but that would be silly in my opinion. So it's interesting that at the end here, and I'm going to put a link to this article below in the description, and you'll be able to read it because it will be under archive.ph. And it says, Bernard Dada, senior commodities analyst at Natixis, the French investment bank, said deglobalization and geopolitical tensions meant the drive by central banks outside of the West to diversify away from the US dollar was a trend that won't change for a decade at least. So there you go. A decade of more and more inflation, I would say. Less demand for the dollar, less demand for pounds, less demand for euros. And the part of the world that's doing this is a huge part of the world. 80% of the population, they control a lot of the hydrocarbon reserves of oil and gas, and they're all moving away from the dollar. So I think it's very significant, and gold is going to be a big part of it, and that's why I continue to stack, of course, try to stack as much as possible, gold and silver. So we need to see how this moves forward. They do mention here in the article that this could be just an opportune acquisition of gold, seeing that the price dipped from like 2,000 to like 1,600. But like that guy from the French bank said, he thinks it's going to continue for the next decade. And I agree with him on that. And again, this is the move away from paper assets to hard assets. This is a big part of it. And when you have countries doing this, this is not just like investors. This is huge countries doing this, moving away from the dollar, which is really the biggest representative of paper assets. I think people need to take notice. And this is the other thing that Zoltan said in his latest piece, which he entitled, I'll let you know what he entitled it, War and Commodity Encumbrance. So he says the same thing. He thinks commodities are going to be very important going forward, and that geopolitical tensions or wars are a risk, and that makes commodities even harder to get and more expensive. And unfortunately, it's the G7 of the East, as he calls it, the BRICS, and the other countries that want to join the BRICS that are going to dominate going forward, because they've got a lot of the commodities, and the G7 of the West doesn't. So let's quickly look at where the markets are then this morning. It's 10 to 9 a.m. London time. So we've got spot gold at 18.10. That's up about $6. We are right near the highs. The low has been 18.0350. Spot silver is up 12.5 cents at 23.65. That's up 0.5%. High's been 77. The low's been 50. To the stock market, the Dow futures is up 35. The NASDAQ 100 futures up 53. S&P futures up about 10 points at 37.90. To the currencies, sterling is up 0.25%, 120.43. The euro as well up 0.25% at 106.40. The dollar is down 0.2% versus the yen at 133.54. And the dollar is down 0.25% versus the yuan at 697.80. Dollar is down slightly versus the ruble at 72. Let's continue with the other currencies here. Aussie dollar, that's down 0.1% at 67.29. The dollar is unchanged versus the Canadian dollar at 136.00, and the Kiwi dollar is also unchanged at 63.11. To the commodities, we've got platinum trading at 1,013. It's up a couple of dollars, platinum. We've got WTI crude down 2.5% at 76.90. Brent crude is down 2.5% as well at 81.88. High grade copper is down 0.75% at 381.20. And US nat gas is unchanged at 465.80. Quickly look at the bond markets. The 10-year yield, US 10-year yield is down 4 basis points at 385. And a quick look at the gilt yields, the UK government bond yields. The 30-year is up 5 basis points, approaching 4%. It's at 398. The 10-year is up 5 at 370, and the 2-year is up 3 at 362. So with that, I wish you all a great rest of the day. Take care. Bye.